This is Jim Lang. This is the sixth video in a series regarding the death of the stretch IRA and how IRA and retirement plan owners can protect themselves and protect their legacy against the dreaded Secure Act. So one of the strategies that we examine in our new book, Beating the New Death Tax, is actually a series of gifts. And gifting can take on a variety of flavors. It can be a simple gift. Here's some money. And I'm really referring to gifts most likely to your family, children or grandchildren. Here's some money, go do what you like. Here's some money, we recommend that you use the money to purchase Roth IRA conversions for yourself. Here's some money, we recommend that you put money in your 401k plan or your 403b plan, or what you think might be appropriate, maybe a down payment for the home, etc., etc. Something that might be consistent with your values. Another thing that might be consistent with your values that I just regard as another variation of a gift is a 529 plan. This is a tax-free, assuming you meet the conditions, investment in your most likely grandchild's education. And I'm a big fan of all these gifts. And the other type of gift that also probably deserves attention, not for everybody, but for some, is actually life insurance. And if you think about it, if you buy a policy, and particularly maybe a second to die policy, which means it doesn't pay until, well, the euphemism is when the policy matures, meaning both you and your spouse are gone, the money goes to the named beneficiary, most likely your child or children, not subject to federal estate tax, assuming it's done right, no state inheritance taxes, no income tax. I mean, this is just an unbelievable tax haven. So let's just say, for discussion's sake, that you get $1 million policy and the premium's $20,000 a year, and you pay it for 20 years, and you and your spouse die, so you have $400,000 into the policy. Well, the policy pays $1 million. Well, gee, shouldn't somebody have to pay tax on the gain between what you paid, which is the $400,000, and the $600,000? That the gain of $600,000? No, nobody has to pay the gain. It's just a great tax loophole. So that is one of the strategies. Again, we talk about all the gifting strategies, but this particular one, which is in graph 12.1 in chapter 12 of our new book, Beating the New Death Tax. If you have not already done so, I would highly recommend that you purchase this book. You can get it on Amazon for 99 cents. That's the digital version. The hard copy is $24.95. It's, I think, a very important book for IRA and retirement plan owners. And you can start learning how to protect yourself and your family from this dreaded new law that if you don't do anything, your family's just going to get clobbered with taxes. So again, Amazon.com. My name's James Lang. The book is Beating the New Death Tax. There's a very detailed table of contents. There's a good overview. You look at the table of contents and the overview. I think you'll know which chapters to read. And then after you are, let's say, even a little bit educated on what the new law is, the most important thing is to actually take action. If you're a do-it-yourselfer, do it. If you have advisors who you're totally comfortable with and they're on top of this new law, talk to them in the event that you might be looking for additional help, either because your advisor isn't up to snuff, or at least on these issues, or you like what you read. There's information in the book to talk about how it might be possible for us to do business. We're only obviously looking for right fit clients, which I would define as clients that we could provide massive value relative to our fee. But the first step is to get the book, look at the table of contents and the overview, and then develop some type of plan, and then either with the help of an advisor, do it on your own, or even possibly with us, please take action to protect you, your family, and your legacy. Thank you.